With the markets being so volatile, I'm sure clients are wondering, where do I pull money from? What should I do? How does this affect someone's overall decisions when seeking assets to create income when you're looking at market volatility?
Right. So when market volatility happens, all of a sudden people very much panic because they don't like the idea of their money fluctuating all over the place. But this is where we're bringing in proactive money management because, again, I mentioned this on another show a few weeks back. What we did earlier this year was we went through and we de-risked our portfolios. We went to our clients and said, look, how do we take things off the table? How do we peel off gains? And how do we actually de-risk, lower the volatility, and lower the risk every single year? This is what people are looking for, is actually proactive management. And there's not enough people out there that have it. That's where they get frustrated with the financial industry. I've said plenty of times before, I don't know who's more frustrated with the financial industry, me or the consumer, because there's a lot of distrust out there. And so when the markets get volatile, all of a sudden we realize maybe we're not in a great position. And that's really where we get a lot more phone calls. But the other thing that we have to realize is with volatility, there's other areas of volatility besides the stock market. Unfortunately, investors only equate volatility to the stock market, but it could also be in your tax plan. Your tax plan could be very volatile. When it comes to inflation, if you're not fighting day-to-day inflation or medical inflation or healthcare cost inflation, that's another type of volatility. Remember that another word for volatility is unpredictable. So what we're trying to do through all the financial planning process that we put you through is taking what is unpredictable and maybe making it a little more predictable. And so again, when you go through the process, it's answering more questions, and a lot of times questions that you didn't even think that you had. And a lot of times in the very first meeting, people will say to us, look, that's more than I've ever known before. So again, what we're trying to do is get people reacquainted with their finances, reacquainted with their financial situation, and say, look, volatility isn't such a bad thing. It's actually just how you react to it. And through the financial plan, it can answer an awful lot of questions.